Hi, this is Monday, July the 8th, first day after the long weekend, and we're going to have a quick look at what the market has in store for us this week. As you can see, the market is still very much bullish. It has broken recently the resistance in the 2950 to 2970 area to now, of course, tease the 3000, very important psychological level. That said, even though bullish congestion looks like a reasonable scenario, the market could actually push higher. We see here we don't have any mean reversal pressure. We are actually in a kind of a channel, which I could draw quickly here. And this channel seems to be in a more acceptable gradient than we have seen earlier this year. In terms of signal, it looks like we are in a weak but still valid up signal. So of course the bumping on 3000 will carry on, and if we now look on a shorter time frame, it looks like the 2970, which has already been tested for support, could be tested again, which would indicate a trading range, a pretty narrow trading range, 2960 to 3000 in the short term. And here again, we have no real mean reversal pressure. The market is basically keeping above the moving average as it has been for the last couple of weeks. The unknown is whether we will have, in case of an attempt to break out, whether we will have a sizable short squeeze to then take the market much higher. I do believe that the true long-term target or long-term resistance is somewhat higher, probably in the 3100 area. So for the coming few days, this bullish congestion is likely to continue. There may be a little bit of a sell-off if buyers give up and we see this level being broken to then fall somewhere. I mean, we could draw some Fibonacci here. So there would be some support levels on maybe between 945, 55, 65. Going below those levels remains very much unlikely, unless, of course, there's some exogenous external source of information that really disturbs the current balance. At this point, I would think that buyers are catching their breath and ready to go at 3000 and above again. Now let's switch to the Russell. The Russell does have probably more room on the upside. It has not reached the all-time highs from September last year. So overall, the same bullish congestion, maybe trying to go for 1600, 1610, 1650. That would be the last barrier to then go for the 17, 1720, 1740 all-time highs. It does not have much pressure to go down, and as a matter of fact, if we were to draw fib expansions, we would see that the next level will be around 1678, 1680, then maybe going higher to the 1800 area. But this will not happen anytime soon. So the bullish congestion to 1600 is likely, and we have support on 1500, 1450, and here as well, no real pressure to go south. So here again, I would suspect that the bulls are just catching their breath, getting ready to go higher. Does that mean that we'll have a summer rally? It's hard to say, but this is a possible scenario. We'll have FOMC, we'll have earnings, and we'll see how it goes in the next few weeks. Before closing, a quick look at the VIX. The VIX has been falling steadily since early June to go back to low levels we thought we hadn't seen since October, and we had a trough here on mid-April. The market could actually then congest on the low side, which of course, if we look at anti-correlation with prices, that would mean that if volatility clusters here and then shoots back, the SPX could actually then be bumping for quite a while on 3000 and maybe retrace. But in the short term, it looks like there's no real pressure. I mean, we've seen reversion to the mean going slightly lower, so we could have a congestion here, and we have to see maybe if the lows are being tested on 12.5, 12.6 to 13. And more generally, this is not exactly a very healthy scenario. When volatility hangs around 15 or higher, as we're going to see for the management of our positions, we have more room to adjust if and when necessary. Now it's getting difficult, and that's why it became unnecessary or even uninteresting to keep the July position longer. So in terms of volatility here, there may be a continuation here if a channel starts shaping. If 3000 is broken, congestion, low volatility is likely to continue, and this low volatility is not really exciting for the coming trades.